Welcome everybody. Welcome to today's market recap for 28th February 2017 and potential auction paths. Myself Dean. You can get in touch with me on Twitter or visit my website getthattradingedge.in. Softwares used for today's presentation are Bell Market Profile and Bell Order Flow. You can visit belltpo.com for more details on the softwares. Let me go through the disclaimer. Information shared here is not a trading recommendation and we are not a business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decisions. So let's go to charts. Okay, this is the development for Nifty today. We opened inside range and then we tried to move higher early on, but we found some rejection once we entered the value area for yesterday, but the rejection was not very strong, and for A, B, C, D till D period we were just trading above and below the open for the day. So today was the open inside range and open auction kind of a opening, and that is a type of opening which always has very low confidence. That was evident till H period. There was nothing substantial happening. The confidence was low on both sides, so this failed auction below yesterday's low could not generate any follow through at all, and this lack of follow through was responsible for giving confidence to bears, and then they again broke down in another leg and tested this reference which we are mentioning for quite a few days now. But as mentioned in yesterday's post blog, I was talking about this Q shape developing. So this was one distribution, this was another distribution, and then we broke away from this distribution. So this was the Q shape I was talking about in yesterday's video log, and as soon as it reached the first reference below, as we had discussed earlier, that since the value was developing higher, any move away from value is most likely to be contained by the first reference that is available. So this first support level itself contained this down move and pushed back the prices back into today's value area, and at that time this volume point of control was here and we moved up and repaired that. So I mean, this worked out exactly as we had anticipated in yesterday's video log. So anybody who had that context in his mind could have entered along here. I think someone in the Slack group, I think it was Tutul, who pointed out a possibility of a buying opportunity when the prices were trading in this zone. So I feel good that whatever we are discussing in our videos and vlogs is being used by the members of the group in their trading and it's benefiting them. So that was a very good trade for going long here and just covering out once we reach the developing point of control for that day, which was in this zone somewhere. This was a scalp only, so it was not a very unless and until we start getting follow through higher, you cannot be sure whether this trade is going to continue higher or not. So if somebody got in here, he should have got out in this zone, and he would have got a nice scalp trade for the day. Now once again, for tomorrow's development possibilities, We have a nice rejection in I period. You can see this here. So immediately we know that if the market comes lower and starts training in this zone, negating these single prints, we immediately can say that whatever buying came here was not from very strong buyers, and this rejection was not that strong. So finding acceptance in this zone immediately opens up lower references, and we will again go lower and test these lower references. So that is one possibility. If this rejection is good and smart money is actually accumulating in this zone, then in that case what will happen is we will open higher, and we have this whole area this area and today's thick area where many people have gone short because we are developing lower values each day. So anything opening higher and finding acceptance in this zone will start putting traders who have shorted in this fall under pressure. So progressive stop hitting might happen. Opening here will put everybody in this area under pressure. That might lead to moving higher and triggering stops above this pivot high, then this high, and so on. And we might test this high of day before yesterday to find what the smart money is looking for, whether it is just looking for a test of this level and go back down, or we are in fact going to go higher by finding acceptance above this level. So this is what I feel will happen in Nifty. One more thing is possible, that if we come down and again find rejection in this area, then there are two possibilities: either we consolidate in this zone, or post funding rejection move higher, get a test, and again go and probe for higher levels. So these are the three possibilities for tomorrow in Nifty. Let's go and check out Bank Nifty. Here it is. So Bank Nifty has a slightly different development. We had a nice balancing day today. No, we did extend the range below initial balance, but only 2 ticks. So I mean, there was no good range extension today. We had a nice narrow balancing kind of a day. This balance was happening in the range of this late movement away from the value which happened yesterday. So this kind of a development had various consequences, and like it happened in Nifty, Bank Nifty should have broken down, but we did not. So since the prior trend is down, this kind of activity immediately tells us that now the buyers and sellers are both in balance. So both buyers and sellers are in balance, and what that means is that sellers who were controlling the auction for last 2-3 days are now being matched by buyers of equal strength. So the auction is most likely to pause in this zone and maybe consolidate for a while and then decide whether it wants to go up or down. If it wants to go up, then there is every likelihood of smart money trying to probe below this zone, today's low, and come and test these single prints here, because this single print was actually a failed auction of this small balance, and we might move down, test below this level, find nothing, and then move up. Another possibility is build value higher and then accelerate. So these are the two possibilities for Bank Nifty. This did not happen today, and that is why my bias is towards the buyers now, because buyers have successfully stopped this auction. The volume also was low both on Nifty and Bank Nifty today. So 2 days of building value lower on progressively falling volume is not a good sign for bears at all. had the bears had some strength, then they should have, done this particular action on increased volume. So what I feel is that we had this spike in Bank Nifty, and as I said that Indian markets are not that efficient and they do not follow the auction principles to the tick. So what happened was we had a spike, we had some fight between buyers and sellers in this zone. The sellers got the better of it, but actually it was just uh, strong buyers waiting to find what this zone and more importantly this zone hold for us. The market came down in this zone again. This time the sellers were dominating when it came down, but buyers again showed up and match the sellers. So what it means is that the smart money is just trying to test the commitment of traders in this zone, the commitment of buyers in this zone, and so far it looks that buyers are defending. So finding acceptance, naturally finding acceptance below this zone will immediately open up more downsides, because then everybody buying here will be put under pressure. But I don't think that will happen, because volume is not on our side. Volume is still eluding us. So unless and until we get a nice high volume break, there is every likelihood that any attempt to mark the prices down might fail, and we will get a sharp short covering rally to start with, and then we will monitor for any new business coming in at higher levels. So that is my view on Bank Nifty. I don't think there was, yeah, I can share the order flow chart for Nifty. This interesting development that happened. Yes. So as you can see, as you can see, this was that spike down, and if you monitor the volume on this particular spike as well as the delta, it was very, very high. Compared, you can just simply compare the colors of these cells with those prior to it, and you can see that it's way higher than what was happening in the prior few bars. And whenever there is a sudden price break with exponential rise in volume and delta, it generally suggests that the opposite activity was actually waiting for that opportunity to accumulate. So in this all these deep red prints going into this down bar, closer to the low of that bar, and the price actually closing higher, not higher but well off the lows, is a nice signal that the shorts are getting trapped, and there is every likelihood that the prices may rally from here, and that is exactly what happened. If you go on the lower time frame charts, I would again like to reiterate that these are short-term trading opportunities, so I won't necessarily use order flow chart to take a positional trade or to find an entry for a positional trade. This is only for short-term scalping and intraday trading. On the short time frame chart also, you can see the same phenomena, nice deep red prints going into right, clustered right at the lows of this bar, the next bar closing higher, and what I was waiting for was this nice test. Once I got this test, we got a similar development in the morning also. It also gave a legitimate scalp, but then we had this fall because that was the failed auction and we did not get the expected follow through. So that resulted in smart money trying to push weak longs out of the market by creating this fall, and then again accumulating in this fall, coming back down and testing with lower volume, and then continuing the upward. So this is the pattern on order flow chart that repeats day in day out. The only point here is context. So if you can get the context right, then order flow is your best friend. But if you cannot get the context right, you will see this kind of activity happening at 1,000 other places where the follow through did not happen. So that is all I have to share for today. There were no questions, so hopefully I'll get a few tomorrow. So no questions today. So I'll stop here and we will meet tomorrow. Thank you for listening.